Good afternoon. It is Poon Yew with you live in the studios of TraXX FM in Angkasa Kuala Lumpur for a pre-budget 2019 special. Thanks for joining me. And speaking of joining me, in the studios with me, two gentlemen, Mr. Poon Yew Hoe, who is a council member of the MICPA, as well as managing partner and tax partner of Crowe, Malaysia, joined with Laurence, Todd, Director of Research, Institute of Democracy and Economic Affairs. Both of these gentlemen join me today in this discussion on our budget expectations, as well as what we see for budget 2019, as well as restrictions, reality, and other facts that we need to deal with when it comes to the presentation of budget 2019 in a few moments by our finance minister, Mr. Lim Guan Eng. First of all, welcome to the studios of TraXX FM, gentlemen. Thank you.
Hello.
Thank you.
Alrighty. Let's begin with the expectations as well as facing of reality. For example, our economy is, of course, going through hard times. What do you feel overall, the both of you, of what budget 2019 will be like?
Well, I mean, I think that the government is quite deliberately setting a relatively low expectation at the moment, talking about fiscal restraint and introducing new taxes. So I think they're trying to come in with a low level of expectation that this won't be like the previous budgets, and that's partly in response to some challenges as you referred to in the economy, but really I think it's more about, it's a fiscal exercise following in particular the reversion from back to SST from the GST.
I mean, we've seen a lot of references to it, a lot of how shall we say, the softening of what will be presented in less than an hour's time already being hinted by our Prime Minister, like you were saying, as well as our Finance Minister and other people in the administration. Yeah. Well, thanks for that opening introduction, Laurence. Meanwhile, Mr. Poon, what about your thoughts and views on just generally what the budget will be like?
Yeah, I think to set the context, I was just thinking that really our economy is doing fairly well. We had growth rates of close to 5% all this while. But the only thing is that certain sectors of the economy, like maybe the property sector, is not doing so well. But on the other hand, we do have the oil and gas sector that's come back up, and now with oil prices at about $85 US per barrel, it does look good. So I think looking at the macroeconomic perspective, I think our economy will continue to pose a budget, at least a trade surplus. And the trade surplus hopefully will be translated into a balance of payments surplus as well, which means that we should be able to accumulate more and more reserves, foreign reserves, as we go along. So actually, I don't really have a big problem with the economy. I think maybe the government, what they should do is to think about how to, stimulate the depressed sectors, but at the same time really capitalize on the booming side of the economy. So as far as the government is concerned, that's where the problem is. I think as in many years in the past, the collection from taxes have always trailed behind the expenditures, and we're always like 30-40 billion behind in our spending deficit. So I think it's an area that the government will need to look into as to how they can balance the budget, but yet at the same time don't stifle growth in our economy.
That's true, yeah. Now, speaking of having a healthy economy, can you tell us a bit more about how that should be and what sort of budget that should be like in order to, like you said, stimulate the economy from a domestic consumption standpoint, perhaps, gentlemen?
Well, I mean, I think I certainly agree. I mean, I think that the fundamentals in the Malaysian economy are there. So I think it's about how do you deliver sort of structural reform over the next 5 years that will set Malaysia up, particularly around the transition to a high income country. And I think so. There's a few things that I would highlight. So firstly would be a focus on rationalizing spending rather than new taxes. I think that's important because right now we're still trying to develop those areas of the economy, as has been said, and new taxes aren't the best solution when Malaysian government spending has been persistently high. I also think there's room to reduce the government's balance sheet and dispose of assets and use that money to invest rather than cut the overall investment envelope, as has been suggested. And I think overall it's got to be moving towards the direction of private sector driven growth rather than a very heavy government role in the economy. So I think if we see a signal in that direction in this budget, then that sends a positive message about the economy for the next 5 years.
Right. Thanks for those thoughts, Laurence. And Mr. Poon, anything to add to that?
Yeah, I think I agree with Laurence on maybe getting the private sector to be more involved. But one or two other observations about a healthy economy to me is I think we still need to have good growth drivers in the economy. And what are these growth drivers? I think really looking around, we do have a few very bright sectors already, but perhaps I feel that there's still some room left for areas like tourism, for example, because we know that Malaysia is still an interesting destination for tourism, and I think the various aspects of tourism can be developed. Another area which I really like about Malaysia is I think the agricultural sector, and I believe that that's also another area to be looked into. I think that land that could be used for farming that could actually help to improve the economy. I mean, we hear about the durian economy, for example. I mean, that would be a good example in how we can plant really high value crops to be able to stimulate the economy.
Right. So a sector to be looked into. Speaking of durian economy, I think there needs to be consolidation amongst the small stakeholders.
Well, I mean, actually, just on that point, I mean, I'd be tempted to disagree, because I think actually, well-run small-holding farms can actually be much more productive than large plantations. Because actually, when you have very labour-intensive farming at a small scale, the yield can be very high. So actually, I was quite attracted to what the Prime Minister was saying about trying to sell some government-owned land to locals in order to develop it, and I think that's actually quite positive. So I would agree. I think there is room for growth in the agricultural sector, and actually it will be delivered by smaller-scale farming rather than large-scale farming.
Okay, but I guess the key word is well-run. Well-managed or well-operated, yeah? Speaking of healthy economy and a healthy economy budget, and it does look like, things are pointing towards that as, we lead into the moments of unveiling of Budget 2019. Are we now expecting any tough cuts?
Well, I mean, I expect we'll see something somewhere. I mean, of course, the manifesto was quite light on taking tough calls on where cuts would fall. I mean, one area was, of course, the Prime Minister's Department budget. So, and there was a sort of flurry of closing down agencies immediately after the election, but I think a few of them have cropped back up. So it'll be interesting to see quite how far they've been able to bring that budget down. But I think, it's been interesting that the government's focus seems to be more about tax than about cuts. I mean, that seems to be where they're setting the expectation. So, and we had the Prime Minister saying that, over 80% of the operational expenditure is already fixed. And I think that's a bit of a shame, because I think there's clearly room in that budget for efficiencies in the Prime Minister's department and elsewhere, but it does seem like the expectation is being set around tax rather than cuts.
Poon, anything to add to that?
Not really a lot. I think the new government seems to be doing quite a bit in the area of cost cutting. I think cost cutting has to be done definitely, and if we do the cost cutting well, I think the government can still retain its efficiency, but yet at the same time, incur a lot less expenditure. I think one of the major areas on cost cutting will probably be in the area of personnel costs. So I don't know how the government is really going to, allow staff, civil servants to retire or to resign without replacing them. So they may require some kind of a personnel kind of a redeployment exercise to really make this effective.
Now we've seen actually early on there was some expectations as to budget expenditure being cut, even from the development expenditure perspective. However, I think as we've shaped up towards today, we've seen less and less of concern about that, because people have done their figures and done their calculations that actually, even considering the revision towards the entire expenditure that falls within the 11th Malaysia Plan, we seem to still be okay on that. So I don't expect much of a reduction on that. The development expenses are being cut. What do you see? How do you see this?
Well, I think there's two things, or even three. So firstly is that obviously we've had some major projects that have been either reviewed or maybe cancelled. It's still even not quite clear, and that's inevitably going to create a slight slowdown. And I think also creates some concern around the government's ability to commit to contracts. Now, I think actually in that case, the decision to review those cases, it was right. There was a clear democratic mandate to do that, and there were some real issues with those contracts. But it's important now to kind of put that on a firmer footing. And I think that, so my understanding in terms of going forward is that the overall envelope for development funding is going to be cut, but that still leaves a lot of programs in play. So that's good. I think it's still, the question is it the right trade-off when the government holds so many assets that are arguably not being used efficiently, and those could be disposed of, and that would raise the revenue in the short term to maintain that overall investment envelope. So I think yes, there is still lots of activity happening, but it's the question of whether the right trade-off is to hold on to the government's assets and cut the investment expenditure.
Okay, thanks for the thoughts there. Now, between balancing a so-called belt tightening and people-centric, plus, as we have established earlier on in today's session, a business-friendly environment, how will the finance minister work around all of these key balancing components? Poon, what's your thoughts?
I was thinking that if we look at the last year's budget, we had a deficit about 30 to 40 billion. Where did the 30-40 billion come from is because the revenue collected of close to around 220 billion was only enough to pay for the 180 billion of revenue was only enough to pay for the operating expenditure. So the development expenditure of about 30 to 40 billion was actually financed out of loans borrowed by the government. So in order that we are able to more or less balance the budget, and yet at the same time will not be too belt tightening, I would reckon that a few things need to be done. Number one is that, of course, we're talking about cuts in the government's expenditure. Then when it comes to the development expenditure, I think we still need development expenditure to progress. And in that respect, I believe that our country still need to spend money on infrastructure. I think infrastructure is always important for all aspects of business, transport goods to market and, free flow of people around the country. So how do we actually go about implementing these sort of projects without having to incur a big deficit in the government's budget? I think one way is like what the finance minister has alluded to previously, and that is to go on a PFI approach. PFI means private financial initiative, which means the public and the private come together, and the private sector will provide the loans and work with the government to actually implement the projects. I think the North-South Highway is a good example of a PFI type of project. So I think we need probably privatization of these PFI type of projects, to advance the country, and maybe that's one way of spending less on development expenditure, but yet be able to get the economy moving again. Right.
Yeah. Of course, then lies the question in the future, of course, on the affordability of the public, the Malaysian public, in using those services without, again, having to rely back on certain subsidies, for example. We're going to take a quick break right now and return for that. More on Budget 2019 expectations right here on TraXX FM. You're tuned in to TraXX FM's Pre-Budget 2019 special. My name is Kong Yu, joined this hour by Poon Yew Hoe, who is a council member of the MICPA, as well as managing partner and tax partner of Crowe, Malaysia, as well as Laurence Todd, Director of Research, Institute of Democracy and Economic Affairs. Well, thank you so much, gentlemen, for being in the studios this afternoon. We're talking about expectations as well as what we feel actually would be some key components that will comprise the budget. Much has been said actually on cash handouts, especially under the previous administration, and the way that these cash assistance and aid were being described as well as prescribed for deserving Malaysians. What's your views, gentlemen, on reducing and also the gradually of phasing out of these handouts, to the lower income group? Let's start with you, Laurence.
Right. I mean, I think that it's obviously a sensitive area, because for a lot of people these are very important sources of income. I mean, I think the first thing to say is that we have to get to a point where this is needs-based, and I think we have seen some bad practices in the past about using these handouts and these subsidies as a way to kind of curry political favour. So I think the first thing is that needs to stop, and it needs to be genuinely needs-based and targeting those people that really need it. But I think the second thing is to take quite a hard-headed look about where these subsidies are effective in the long run. So, for example, we've done some work at Ideas looking at agricultural subsidies, and that's raised some issues about whether, in fact, those subsidies have been beneficial in the long term in terms of raising productivity and therefore the incomes of farmers over the long term. I mean, equally, we're publishing something next week on energy, which has looked at how the subsidising of energy prices has actually, influenced the energy mix in Malaysia and forced Malaysia to become more reliant on coal, which is not positive when you think about the country's carbon footprint. So I think that in some of these areas, where these subsidies might feel good or well-intentioned, actually the long-term economic impact can be negative. So I think it's about firstly making sure they're all on a needs-based,
Right.
and then secondly taking a hard-headed look at what's in the long-term economic interest of Malaysia.
Right, and I think a lot has been said, a lot of criticism has been raised in the past, as well as, the whole concept of giving fish to people and teaching them how to fish, right? There's a huge difference between those two concepts. Now, in terms of mechanism and the way forward, how do you see would be the way to gradually phase out the inappropriate cash handouts? Poon?
This is going to be a tough question. I guess the government has to reduce it in such a way that maybe the phasing out could be attributed to inflation, increase in prices and all that. I think there needs to be a communication strategy in this case here, so that any withdrawal does not seem to be like a very what do you call this? Not the method that is like have the citizens in mind. So they need to do it properly. But I agree with Laurence that maybe in the long term, this handout should be withdrawn, especially the economic ones, because if it's not withdrawn, then it tends to create distortions. But when it comes to the handouts to the lower income group in the form of BRIM and all that, I think that's another thing altogether, because some of these lower income groups really do need some extra cash for their sustenance. And I think that at present the system is that they have a kind of a card system whereby what has been given to them can be tracked, and some of them can even use this card just to buy groceries and all those. I think that maybe we should make use of the modern technology to actually monitor the amount that's given out and how it's used, and in that way I think it's probably more targeted and it's more useful, I guess.
Right.
Yeah.
So in a sense also boosting the digital economy and moving towards, of course, helping push towards the cashless payments and transactions like that, right?
Right.
Let's talk about the SST. After 2 years of the GST being in place, we reverted back to that as part of the PH manifesto, right? And the promises for the general election. Was it, from a purely budget and economics standpoint, was it a wise decision?
Okay, I'm supposed to be expert at this.
Thank goodness.
And actually, of course, I've gone through, as a tax consultant, I've actually gone through the implementation of GST way back in April 2015, and then now SST has been implemented. And of course, a lot of people say that the GST is a better system. I would think that in principle GST is a better system, and GST is such that you actually do not have a double taxation whereby the same thing is being taxed twice. I think it is only taxed at the final level, which means at the consumer level. But now that we revert to SST, what we do find is that there are times where there will be a cascading effect, they call that, where something is being taxed twice. For example, if I were to render my services and my type of professional services are subject to service tax, I have to charge service tax. but the thing is that I may be buying some of these services from, say, a lawyer, but the lawyer charges me service tax as well. So I have to pay service tax on that, and I will in turn charge a fee to the customer, which actually includes the input of the lawyer. And so the fee that I charge will also include service tax. So it's actually a double layer of service tax. And so because of that, the rules in SST will need to be much clearer in order to avoid this type of double taxation. And so if it's the question is whether it's a wise decision, well, I mean, it's difficult to say. I think both the taxes have got its pros and cons. SST is very simple to implement, and it doesn't really, and if they implement it well, it doesn't really cause much inflation. In fact, how SST is being implemented is that there's a lot of exemptions for, let's just say, the manufacturing industry. So that is very helpful. It doesn't really like create triple layers, the cascading effect. And in the case of GST, it is supposed to be a better system, but the way it was implemented is that a lot of the refunds due to the taxpayers were not refunded, and as a result, it created a big increase in the amount of actual tax that a taxpayer has to pay. So at the end of the day, I think we are quite neutral on the two, whether SST is better or GST is better. But I think what needs to be done is that I think SST will now need to go through a process of clarifications and all those, so that it will be a more clear-cut system of implementation. Yeah.
So essentially, we could still work.
Yes.
Right, with the current taxation, just probably needs a bit of tweaking,
Yes.
As well as streamlining. Do you have anything any thoughts on that, on how to make the system better?
Yeah, I think there needs to be a lot more guidelines from the government as to what type of services are subject to service tax, what type of services are not, because sometimes there could be overlapping. Sometimes it's like questions like management services are supposed to be subject to service tax, but what is the meaning of management services? When is management services? How do you draw the line? And consultancy services are also subject to service tax, but what is the meaning of consultancy? So we need a lot more clarifications on those so that we don't make mistakes, because the problem with businessmen is that when they make mistakes, they know they're going to be penalized, so they want clarity.
Right.
It's not that they want to pay, they just want clarity. They pay and then they factor into their selling prices. So that's really the challenge now on the implementation of SST.
Okay, we can take a quick break and more on pre-budget 2019 expectations when we come back right here on TraXX FM. Good afternoon. You are tuned in to a special pre-budget 2019 edition with me, Crowe, joined by Poon Yew Hoe as well as Laurence, Todd, and we were talking, of course, before that break on the implementation of the SST and comparing that against 2 years of the GST regime as it was being in place. Speaking of taxes, there was a lot of discussion, a lot of murmurings on taxes that would be introduced. And namely, of course, the inheritance tax. There was one that was being discussed, as well as capital gains tax. It does look like those probably will not appear in the budget. Am I right to assume that, Poon, as well as Laurence?
I mean, yes. I think that the implementation challenges alone of introducing whole new tax systems makes it very unlikely that sort of substantive changes like those to be introduced, let alone the fact that there wasn't a particular political mandate to do either of those things and not much popular support. I think the clearest signal has been that we're going to see something on the digital economy, and we were just discussing that outside about the different options to do that, because that certainly brings its own challenges. Broadly, the government has a choice on the one hand of trying to go after the income of digital companies overseas, which is very challenging, and in even huge markets like the EU can't decide how to do it because of the risk of double taxation. And the other option is to expand the scope of SST to include online transactions from overseas, which, as we were just discussing, the challenges with the SST already, adding that to the customs to-do list is quite hefty. So it'll be interesting to see where the government lands on that. I mean, I hope that it's it's as minimal as possible, and if it is there, that it is going down the route of expanding SST, because I think that's the only achievable thing. But even then, I think that would bring some costs into the digital economy in Malaysia, which is something that we're trying to expand and grow. So I hope that that's mitigated in some way.
Poon, what's your thoughts on this? Do you feel that there would or would not be these new taxes that will be implemented, as well as your thoughts on the digital tax?
Yeah, I think there's so much news about digital tax, and that the government's proposing to impose this on companies that sell digital goods and services to Malaysians. But really, I think if we look at the first year of implementation, how much extra taxes can we collect? I mean, for me, I've just done a very quick calculation. I believe that the digital transactions in Malaysia here, I don't think amount to more than 1 billion ringgit. So even if you impose 3% tax on that, that will come to maybe 30 million. So may not be. Let me just see. If it's 1 billion ringgit, so you'll be only 30 million ringgit of tax collected. So it's actually very minimal. But also, I guess to us, the digital tax is still a very new thing around the world. I'm wondering whether we should take the lead on that, or let other countries try it out first, and see how it goes from there. Yeah.
Right.
So that's my view about it at the moment. I know digital tax very well. We look into all these things called BEPS, which is base erosion profit shifting, and then we also study how the digital economy raised different type of tax challenges, to tax authorities, and to overcome that, some of the tax authorities think about imposing digital tax, but really it may be a bit difficult and premature, because you have to look into all the international double tax treaties and all those, whether it allows all these stuff taxes be imposed. So anyway, for me, I just feel that as a government, I think we should not upset our business partners overseas. So maybe that needs a little bit more study.
Okay. So in lieu of that, in lieu of what you just said as well, so do you foresee any other taxes coming into play?
For me, I hope that there will not be, because I really don't think the situation in Malaysia is that serious, because like I mentioned just now, last year the budget deficit was 30 to 40 billion, but last year's budget deficit was partly because the oil price at that time was quite low. I think they were only using like $60 per barrel, as the forecast. If this year we can do like $80 per barrel, I believe that the collection from Petronas is going to be a lot more. And on top of that, with the tightening of expenditure, I do not foresee that our deficit is going to be that huge anyway, unless there were losses during the previous government, due to whatever the scandals are. All right. So those are only unknowns that I can think of.
Yeah, I was just going to say, I completely agree with that. I think before the government imposes new taxes, it should look at how it can reduce spending and all those other things that have been mentioned. And what I would add is the problem of revenue leakage, the problem of illicit trade and lost revenues that should be paid on goods that are smuggled is huge. I think you could easily run into the tens of billions. So going after that rather than looking at quite complicated new taxes that don't raise that much revenue but just raise a bit of business uncertainty is not the right direction. So I think there's a lot of room to maintain a balanced budget without reaching for new taxes. And then I think the last point I would make on that is that I actually don't think the fiscal deficit is actually that worrying. It's actually not that big. So I don't think it calls for sort of radical new measures. I think it's about prudent fiscal restraint,
right?
Getting the books in order, reducing this wasteful spending, sharpening up procurement, going after revenue leakage, all these sensible things, rather than overreaching and trying to go for bold new taxes.
Right. I think number one, we've got oil on our side, we've got the price of crude oil on our side, and second of all, I think when it comes to planning, not the budget per se, but in terms of even like the 11th Malaysia plan, and other milestones that were already preset, I think we've got some room to maneuver. We don't have to be so strict. There were just targets that were given, and there were targets that were set, say, maybe a couple of decades ago, but it's not such a big deal to move those targets by several years.
Exactly.
Yeah. in light of the situation that we find ourselves in today in 2018. Now, what sort of positive changes you think as we get to wrap up the pre-budget special that the new government would be implementing as well as what we expect?
Well, I mean, I think one issue that we've touched on but not gone into much detail is procurement. I think having a more competitive, transparent approach to procurement would be really positive. It would be positive fiscally because, as we've seen, the Finance Ministry have been able to dramatically lower the cost of existing procurement contracts because there was so much baked into them. So I think it would be good fiscally, and that would ultimately be good for taxpayers. But it would also create opportunities in the private sector for more companies to bid for these contracts fairly. So I think, that's an area where the government is very clearly moving in the right direction, and I think some specifics about how the procurement process is going to be improved would be one very clear positive.
Poon, anything to add?
Just wondering what the government do, but I mean, for me, my view is that looking from the point of a managing partner or a CEO in this case, I would think that the government should actually look at every industry sector and do a kind of like bottoms-up kind of approach to their budget planning or financial planning, and really be able to deploy any excess funds that they have into the different sectors that can help to stimulate the various sectors. I think if we don't have the money to do the big projects and the things which may or may not have immediate returns, I think we need to defer all of those and just instead deploy money into the priority sectors for the moment. Yeah, it could be a digital economy, maybe something else. I think it's for the experts to decide on that. Yeah,
right. It's going to be very interesting how it all comes together, and I think as we get ready, of course, to hear it all from our finance minister in a few moments. Definitely, I think there is much more, in a way, positivity towards the budget that is to be unveiled, as well as what we will see being managed in the next year or so. Meanwhile, Tabung Harapan, of course, was something that was mooted, when the new government came into play. For the benefit of our listeners, any idea, gentlemen, on how that's being managed? It's supposed to be on servicing and managing debt. And for debt repayment purposes, should it be used for any other purposes in this particular case? And how is it actually being managed? Do you have any light to shed on this?
Well, I would say that the size of the fund, although it's really impressive display of patriotism, is clearly not that significant when it comes to the overall stock of debt. I think what the government should do with it is invest it into something really positive, like set up a commission that looks at all the government-linked companies, whether they're still valuable and where they're not, how those assets can be disposed of and handed over to the public in some cases. I think using that fund to invest in a new policy around the government's role in the economy would be one very positive way of using it.
This is a difficult question, but if I'm responsible for the tabung and people have donated this money to help the government to pay down the debt, I don't think we have any other alternative than to pay down the debt. Otherwise, you'll be not really doing things with integrity in this case.
Right. Well said there. After all, it was truly for that particular purpose. Speaking of debts, right, the other thing of concern, of course, is like debt levels. 1.087 trillion. As was officially revealed. According to rating agencies, it is less. It's about 886 billion, right? Where are we? Do we have any further information on that, as well as the task of actually managing such a high debt ratio, even if it was 886 billion, as claimed by several rating agencies? Gentlemen, your opinion on this?
Well, I mean, I'll just be brief on this, but I think that the difference between the 800 million and the 1 trillion, I think, is down to how you measure liabilities. And I think it's reasonable for the government, and I think it's actually very positive that the government's been so transparent about the books. I think that's been a really good thing. I think that it's been slightly distracting because now the focus is all on this 1 trillion figure, when actually what's more important is the deficit. The stock of debt is less of an issue. I think And I think overall, like as we've been discussing, I think the Malaysian economy is fundamentally in quite a good place, and actually has room, if the right decisions are taken now, to be in a very strong place over the next 5-10 years. And I think when you take that sort of perspective, I see a 1 trillion debt as totally manageable. So I think it's less about talking about the stock of debt and more about talking about the right structural reforms that will, deliver a stable revenue base over the next 15-20 years to pay that off. And that means a strong economy at the end of the day.
Right, even though certain, economists basically come from the perspective that we do have a high debt ratio of over 80%, right?
Yeah. But I think international economists will change their minds on what is a good or bad thing, and you really need to get into the specifics of the country you're looking at. I mean, our Prime Minister, in the 80s, kind of went against what all the kind of international consensus was. So I think that it's important, if you look at the specifics of the Malaysian economy, I think it's manageable. That's what I would say.
Interesting thoughts, yeah, Laurence. Poon, anything to add on this perspective?
I think more or less the same, in the sense that if we can grow the economy, maybe one day the 1 billion will become 50%, of the new GDP. So so long as we don't incur more loans and our economy can grow, I believe that the loans becomes very manageable. And even this 1 over billion that we talk about, I think the difference between the 800 over billion and the 1.08 trillion, a lot of those are actually PFI projects, which means to say that those are more like leasing liabilities. So what happened is that those guarantees and those liabilities that incurred were actually in a way guarantees given to projects where the government, let's just say a developer develops a property and the government is supposed to rent it from the developer. So the developer would have incurred certain loans, borrowed certain loans, and these loans may have been guaranteed by the government. So it's actually productive assets, I would say. Hopefully those are productive assets. So in a sense, those loans are not, to me, it's not so critical. But if a country were to borrow money and just spend it on operating expenditure, then it becomes pretty serious. So I think out of the 1 over trillion, maybe 800 over billion is really lost somewhere, all right? But the 100 over billion could have been still in fixed assets, investments and others, which can bear income in the future, hopefully.
Yeah, interesting perspectives. Yeah, another key part of it that's received some attention, of course, part of the predicament of the B40s in general, and that's on the yet to be seen details on a healthcare plan that is catered to those in that category. Yeah, any light to shed on that, Laurence?
Yeah, I mean, healthcare is a very difficult issue because the reality is that the costs are rising. So I think that at the moment the Malaysian healthcare costs are pretty competitive. I think that ultimately, I suspect there's going to have to be some increase in the current level of fees. Obviously, that will need to be done in a progressive way, so to insulate those who can't afford those increases. But I think there's going to have to be some of that in order to deliver the scale of increase in financing that the Ministry of Health wants to achieve. So I suspect, we'll find out quite soon. I expect, but it will be interesting to see exactly how they frame that in the budget, because I don't think it's going to be deliverable solely from the state's finances. I think there'll have to be a greater role for fee payers in the healthcare system in over the long term.
And the other concern that we actually spoke about, which we'll get to when we hear it from our Finance Minister Lim Guan Eng, who is actually now at Parliament Live. So we are crossing over to the unveiling of Budget 2019 right now. This is TraXX FM, and you're listening into a post-budget special right here immediately following the unveiling of the 2019 budget by Finance Minister Lim Guan Eng at Parliament. I am, of course, joined by my two special guests in this session. Poon Yew Hoe, who is a council member of the MICPA, as well as a managing partner and also tax partner of Crowe, Malaysia, joined by Laurence Todd, Director of Research, Institute of Democracy and Economic Affairs, right here in our discussion special. So, gentlemen, welcome back to the studios TraXX FM. Thank you very much for being with us this evening. And yeah, so we just had the unveiling of the 2019 budget by our Finance Minister. Lots of interesting components to it, a few surprises, I would say a few very dynamic and creative measures as well. We shall talk a little bit about this. Meanwhile, Budget 2019 is with the theme Credible Malaysia, Dynamic Economy, Prosperous Rakyats. Well put together there. Gentlemen, first up, your reaction to the budget overall.
Well, I mean, I think it's, there's a lot there to digest, but I think overall, I think it's a really good attempt actually to balance all the different things that had to be balanced. I think that we've seen quite creative ways of recalibrating the manifesto, I think. So I think it'll probably surprise on the upside from the consumer perspective in terms of delivering all those different promises, albeit there are compromises and there are kind of creative ways, as you mentioned. I think there are some other surprises, including some kind of nasty surprises in there. I think the soda tax which was sort of mentioned once a few weeks ago, has come back, and I think in a few other areas, but also some positive signals in the longer term. I was pleased to hear that there definitely are going to be looking at the non-strategic assets held by the government and the role of the government in the economy. Not many specifics on that, but that's something that we hope to see more detail on in the future. So overall, I think a kind of good effort to balance the competing priorities, and the thing that's obviously given is the deficit, and that's why I think that the taxes we see are relatively modest. The gambling industry might feel differently, but so yeah, I think overall a decent effort.
Right. We should come back to a couple of the points that you made. Meanwhile, I want to get a reaction, of course, of Mr. Poon Yew Hoe. What about your reaction to the overall budget?
Okay, like what Laurence said, it's quite a lot to digest, but I think I'm very positive about it, because I think the fear was that the government is going to downsize the budget and throttle the economy and things like that due to budget constraints, but we actually didn't see it happening. In fact, if we would look at the numbers, the revenue of the government is expected to go up by 11 point something percent, 11.2%, and the amount is 26 billion. Where did this money come from? I speculate that it's from Petronas. I'm not sure, because the finance minister did say that 30 billion will be coming from Petronas as a special dividend.
Yep.
And actually, surprisingly, operating expenditure has also gone up by 24 billion.
That's right.
What spending is this that gives rise to 24 billion? I don't see much in the real detail items, although details are actually lacking. But I believe that it could also be partly related to the 1 MDB budgeted for kind of expenditures previously. So that could be one of the reasons. Development expenditure, not much change, that's fine. And then actually, if you look at tax revenue, the increase in tax revenue is actually very small. So that means they are not really relying on the tax revenue to finance the government expenditure. So I believe that the increase in government revenue of 26 billion is probably mainly from Petronas dividend. But overall, I think I'm happy in the sense that with a bigger budgeted revenue as well as a budget expenditure, we will expect the country's economy to grow further, because I think GDP is calculated partly based on government expenditure, your net exports over imports, and a few other items. So I think this actually looks good, I think, for the year that's ahead of us.
That's right. We're actually expecting the GDP to grow by 4.9%. For 2019, right? Interesting that the percentages has been used as well. Usually it's a round down or round up to the 0.5, but this is the first time I think we've seen the 0.8s and the 0.7s. So definitely, I think, like I said, in the very least, it's a very dynamic and creative way of looking at things and having some seeds of innovation, I would say, in actually coming out with this particular budget. We've talked about, of course, the budget actually being increased by about 24 billion, right? With the development expenditure maintaining, and those are pretty interesting figures as well. And without actually the actual sort of like sums and calculations, pretty hard to see the actual breakdown. Now, you did mention something, Laurence, earlier on, some nasty surprises if I'm quoting you correctly. Where did you see that, and what are those?
Well, look, I mean, I think the first thing to say is that, as has been pointed out, the big jump here is in the operating expenditure, and that I think kind of plays out in kind of lots and lots of small ways, in education and health, and meeting the different manifesto promises. I think that then what's happened on the other side is, on the revenue side, is that, as was just explained, I think most of this is coming from Petronas. There are then a few small revenue-raising measures. So actually the new taxes, I would say, are relatively modest. So the approach on the digital tax is just to expand the scope of the service tax, which is what we were just discussing before the budget, which I think is reasonable. I think it's quite a dramatic increase in the rates for the gambling machines.
Right.
And obviously I think there'll be a response from the gambling industry there. I think also this departure levy, which is effectively a sort of extension of the tourism tax. So I think that's something that hasn't particularly been aired and will be of a concern to the tourism industry. And then finally is the soda tax. I mean, I think in terms of then sort of tone, the other thing I would point out on the negative side is the reintroduction of this Buy Malaysia campaign. So on the one hand, the government sort of is signalling a kind of lesser role in the economy, more room for kind of innovative private sector development, and that's certainly welcome. But then on the other hand, still kind of going back to these quite heavy-handed tools. So I think there wasn't much detail on exactly what that will look like. So we'll have to see in the coming few days. So I think there were a few kind of, as I say, nasty surprises in amongst the overall package, but I think that they're not really, if you compare the two numbers here, an increase in operational expenditure of 10% and an increase in revenue of just over 10%, but a lot of that revenue increase, as we just discussed, is a one-off, is Petronas. So I think we're going to have to come back to this in the next few years to see how we're going to work that, close that gap.
Right. And one of the things that we were talking right before we went on air was the departure tax. What is that expected? Because we weren't particularly clear about whether it's just for outbound tourists or does it involve everybody. So the extent of that revenue is not. It's a bit of a question mark at the moment, isn't it?
Yeah, I myself also don't have the exact details. Couldn't follow the speech that well, but it seems to me to be a departure tax for anybody leaving the country. So if anybody were to travel overseas, it looks like they have to pay this tax. And it has the effect, I guess, in more than probably in two ways. Number one, I think it will discourage overseas travel and therefore discourage spending, but maybe encourage more spending on tourism in Malaysia, for example. And secondly is that it probably provide a bit more revenue to the government.
Correct.
So it's actually a twofold kind of a benefit.
The actual amount, of course, remains to be seen. But it's interesting as well on the what Laurence was talking about on the the soda sugar tax actually isn't going to be amounting to all that much. I haven't done the calculations on that. The digital tax that's basically been introduced for online streaming services, right? Mostly that's going to be, I think, more of an interesting experiment than anything else, isn't it?
Yeah, I mean, it's the approach that Singapore is taking, I think, and will be introduced next year. So, I mean, just as we were discussing before the break, I think it was realistically the only thing they could have done.
At the moment.
So I think that it's probably for the best, but I think, as we were explaining before, I think the revenue from that is relatively low. So I think, again, there is a gap that's opened up here that will need to be closed over the next 3 or 4 years.
Right. Now, particularly smart, I thought, was the gambling licenses, right? The increase in that, as well as the multifold sort of everything to do with the gambling industry in terms of getting approvals and the actual licenses with the machines. I mean, I think I thought it was a particularly smart part of this budget, because I don't see the operators having any choice. They're not going to close down the casinos and they're not really going to drastically reduce the amount of machines which are available for the public, and it's almost a surefire way of upping the budget totals there.
I see that there's going to be two implications. I think number one is that probably the popular gaming places are going to survive. So those who are on the borderline will find it a struggle. But the second side effect will probably be that some of these type of gaming places may go underground, and it may actually create a different kind of problem. But we'll see. Yeah.
Right.
In fact, I'm pleased you mentioned that, because that also potentially even applies in the case of the soda tax. It's when we think about illicit trade, it's been high taxes that's been part of one of the driving factors, at least, in terms of the illicit trade in tobacco. So that's always the risk when you introduce new charges, is that you force the trade underground. So it's always a question of striking that balance. So I was a little disappointed that there wasn't more specifically on tackling illicit trade. It was just sort of a more general, the customs will focus on it, which of course, they are already working very hard, and I think, a new approach is needed. And in fact, actually, I think that expanding the duty-free at Langkawi and introducing duty-free at Pankor could potentially even add to that problem. So I think that was slightly disappointing. But I mean, if the investment in enforcement is made, then I'm sure that problem can be reduced.
Right. I think it's going to take that. It's going to take additional enforcement, and I think by virtue of the fact that it was already part and parcel of the budget, as well as in the increase in the vigilance to illicit activities, smuggling, and other activities like that. By extension, of course, the enforcement would have to be stepped up anyway.
The excise duty for sweetened beverages is actually at 40 cents per liter. So I think if you look at a bottle, which is like 250 milliliters, milliliters, it probably costs an increase of about 10 cents. So 10 cents extra for a bottle. And I don't know how much you pay for a bottle, maybe a ringgit or so. So it's going to increase probably by 10%, thereabouts. Yeah.
Right.
But to the hardcore the sugar lover, it's not going to make much of a difference, right?
Yeah, I mean, I think it will. It's not going to kind of fundamentally, wean the entire population off sugary drinks, but it's just an added, friction, I guess, in that choice. But yeah, I mean, I think it's something that the government had mentioned, and it's obviously motivated by a health policy as much as a revenue policy. And
that's right.
So that's to be welcomed. I think in practice, a kind of health strategy around, really looking at prevention, of which this is one small part, is what's needed. It's a wider, okay, how do we, get to a healthier Malaysia? And this is, going to be a small part of that picture, and it needs to be a wider strategy.
We're going to take a quick break, but I'll return more with my panelists today on their reactions to Budget 2019 when we come back in just a few moments. Welcome back to a special discussion right here on TraXX FM following the unveiling of Budget 2019 by Mr. Lim Guan Eng, our Finance Minister, here with Poon Yew Hoe, Council Member MICP, as well as Managing Partner and Tax Partner of Crowe, Malaysia, with Laurence Todd, Director of Research from the Institute of Democracy and Economic Affairs. Join me in discussion. Thank you, gentlemen, once again. Digesting as well as looking closer at several portions of Budget 2019. Our quick discussion during the break, in fact, centered around property and how, a lot of the measures which have been changed, modified, and increased mostly, not quite good news for the property sector, isn't it?
Yeah, that's right, yeah.
Let's talk about that.
Yeah. So it looks like there are two main changes relating to the property market. Number one is the increase in real property gains tax rates for disposals after the 5th year of holding. So it will appear that all the rates have gone up by 5%.
Correct.
So previously, if a company were to dispose of a property after holding it for more than 5 years, the rate was 5%. Now it's increased to 10%. And for, let's say, an individual who used to who used to be exempted from tax if they hold the property for more than 5 years, now the rate is 5%. And then for non-citizen and non-PR, the rate has gone from 5% to 10%. So that is going to hit the property market again, because it means that if an existing property owner doesn't sell his property, he may not want to buy a next one, and with the increase in CKHT, it may discourage that person from selling. Yeah, so that's one of the reasons. The other thing is that there is actually an increase in stamp duty rates. It's hidden somewhere. I don't know whether it was announced in the budget speech itself, but we do notice that previously the stamp duty rates were 1% for the first 100,000 of market value of property, then 2% for 100,001 ringgit to 500,000 ringgit, and 3% for 500,001 ringgit and above. That's 3%. So now they have introduced an additional rate of 4% for 1,000,001 ringgit and above. So the 3% rate, which used to apply for 500,001 and above, has now been changed to the bracket of 500,001 to 1,000,000 ringgit.
Right.
Yeah, and so the 4% now is going to hit all the properties that are sold for more than 1,000,000 ringgit. And it means that anybody buying a new property that is valued at more than 1,000,000 will have to pay 4% on the amount that exceeds that 1,000,000, and of course that's going to be a bit hefty. Yeah.
Right.
And I think that has there's sort of two interesting things that go along with that. One is that, you know, the current state of the property market, where there remains a significant overhang, you know, i.e. a large number of unsold units, and this will further slow down the rate of transactions, you know, and therefore that will probably have a further impact on the prices. I think then on the flip side, it's, you know, all these measures are trying to avoid the affordable housing segment.
That's right.
But I think then the question is, you know, part of the problem with the affordable housing segment has been the presence of so many different agencies at state and federal level. Again, you know, this word crowding out private sector development. And I mean, in a way, what should happen as a result of these tax changes, you know, one positive would be to kind of focus the private sector developers on the affordable housing segment, because they're, you know, relatively now there are bigger profits there because there's less tax. But that can only happen if there's a lesser role for the federal and state agencies. So I think, you know, it could be positive if it funnels the private sector energy into the affordable housing market, but, you know, it remains to be seen whether or not that space will be there for them.
Right. What are your reactions towards the so-called property crowdfunding or crowdsourcing concept? I mean, that's something new, isn't it?
Yeah. That's quite interesting. Of course, a very innovative way of using digital technology to act as to bring the purchaser as well as the lender together.
Correct.
And crowdfunding is presently being used to fund businesses, and it looks like they've innovatively extended this to be able to fund purchase of properties. I don't exactly know how it's all going to work out, but under crowdfunding, there is the intermediary, who is the crowdfunder in this case, who owns the platform, will probably do some kind of background check on the borrower, and then the lender will come in and lend straight to the borrower based on whatever is the agreed terms in the platform. So it will cut out the banks from the lending, and by cutting out the banks, will it give rise to a reduction in interest rates? If it does, of course, it's good for the borrower, and for the lender, he may still be able to get a rate that's better than putting the money in the bank, but of course he has got to take on higher risk. So in a way, a scheme like this is good for both parties, and finally it all depends on what is the appetite for both the buyers as well as the sellers. The sellers must have the appetite to lend to unknown people, and you know, and also to depend on their repayment capability. And for the borrower, it means whether the interest rates are still palatable to them.
Yeah, it would be very interesting to pick the brain of a property expert on this, and how effective this might play out in the future. In a scenario like this, of course, the inherent risk and the complications of working between the parties, isn't it?
Right,
We're talking about like owning properties here, so it's like
Yeah.
very innovative though. So
Yeah.
it's going to be a very interesting change to our property game, I think, in Malaysia. Yeah. Now, related to this, of course, the government is creating a real estate investment trust for its airports. Right? Through this initiative, the government is expected to rake in 4 billion ringgit and disposing 30% of the rate equity. Yeah. This is particularly smart, I would imagine. Well, what are your views?
Well, I mean, I think it's positive. It's it's part if it's part of a kind of broader direction by the government to reduce some of its holdings, and to including its ownership of equities, then I think that's positive, because when the government owns equities, it tends to sort of lock them up, and it kind of reduces the liquidity of capital markets, and doesn't allow for those resources to kind of move about more freely. And I don't think there's a particular strategic reason anymore that the government needs to own such a large stake. So I think in that sense it's positive. I mean, I haven't had a chance to go through the detail of this particular scheme and how involved the government will remain. So I think that's one thing that we need to see.
Yeah, I think REITs are very common in Malaysia and in this whole region anyway. And REITs is always a method by which these income-producing assets can be hived off into the REIT, which is a trust, and then the outside investors can then invest into the trust and then be able to derive income, which is really the rental income from the property. So instead of a normal commercial property, for example, now we are having an airport to be the underlying property. And like Laurence said, if I'm government and I hive off the airport assets into the trust, and then the public comes in and invests into this trust, the public is actually taking away the burden from the government. So the government can then be able to, in a way, indirectly sell off their airport assets and reinvest it in other things. So that is another way of financing. A REIT is a very good way of financing as well. So that's a very indirect way of the government in disposing of the assets, but yet be able still to control the asset, because in the REIT normally not 100% is sold off to the investor.
Right.
It could be just a minority stake. So it is a good financing arrangement.
And I suspect we might see a few more of these. So
I was about to ask, I mean, what other government assets or government control assets would be suitable to be, to be applied in the same way?
Wow. Where do you want to start? I mean, I think it was good that Lim Guan Eng did say he's going to set up this sort of special team to look at the statutory bodies under the MOF Inc. And a lot of these statutory bodies are exactly these kind of entities. I mean, I'm sure that's the case in the case of the airport. I think also the Sepang circuit is there, and you have a few other odd, sort of specifically developed construction companies, for example, that were sort of introduced to build fire engine accommodation or whatever, and have sort of gone on to become kind of construction companies that make a lot of money. So I think what's going to be crucial is this word that he used, which is strategic sectors. So ensuring that the government doesn't have an undue presence in strategic sectors. So I think that's the first thing. Is okay, well, how are we going to define strategic sectors? And then the second thing is, how is the government going to dispose of the assets? Is it going to go through down the same approaches with the airport that it's proposing, or is it going to look at kind of a wholesale buyout option, a direct sale? And I think there are a few different options that the government could look at there, and it will depend on the nature of the asset and the nature of the sector. But I think it's positive, so I hope we see a lot more of this over the next 2 or 3 years, and that will go, I think, quite a long way in addressing the revenue shortfall that the government faces.
I think also put a lot of pressure on the airport operators, because now the airport operator is not going to own the airport property.
Right.
Instead, they will just have to pay a rental to the REIT, who is going to be the building and the structure owner. So the airport management company will have to ensure that it collects enough fees from the airlines, who land at the airports, and from all other ancillary services, so as to be able to pay the fixed rental, for the whole airport. So maybe that will induce a bit more performance orientation, from the operators.
Before, of course, the unveiling of the budget, we were speaking. Laurence, you were talking a lot about making sure things are tidied up. Everything is a bit obviously much more transparent. Everything clean, straightforward in terms of government procurements and things like that. And lo and behold, Government Procurement Act.
Yeah, I mean, I think that was another very sort of positive longer term signal. I mean, not a huge amount of detail today in terms of what's going to be different, but we know from the Finance Minister's previous statements that it's about moving from direct negotiation to competitive bidding. So I think that's very positive, and he cited obviously his his favorite examples of where he's been able to reduce costs. So I think that's good. I think obviously then now the question is, okay, let's see the act and what that means in practice. But yeah, I think improvement to procurement is one of those sort of structural reforms that this government should try and get under its belt pretty quickly, because it's long overdue and is good for everyone, and this government's got a sort of strong message on it. So it's good to see that strengthened here.
Anything to add, Poon?
No, I just think that government procurement, to me, that is actually a no-brainer insofar as improvement is concerned, because in the past so many of the practices were in a way abuse of the system, and so if they would just put in professional procurement practices in place, you would definitely reap the benefits.
All right. One of the other key topics we were talking about prior to the tabling of the budgets are the Bantuan Sara Hidup. So that actually it's come back and it is actually increased in a nutshell. I mean, there's a full calculation to that. What are your thoughts, gentlemen, on that? I don't think we saw particular details as well on how the increased monitoring on how the sums would be spent during the tabling of the budget.
Yeah, and also in case I missed it, we didn't get the overall envelope, so it wasn't clear whether the total amount will increase across all categories, or whether, because he gave a specific example where it would increase for a given family size. I can't remember exactly the specifics. So I think we need to see quite a lot of detail there in terms of where the increases will be, because if it has increased across the board, that's quite significant, and that will be the big driver of the increase in operational expenditure.
Yeah, it was. I can't remember the exact amounts, but
right.
It is an increased amount in total.
In total, okay,
that's right.
That's helpful. I mean, I think then it comes back to what we were discussing before the budget was revealed about, okay, exactly what, as you mentioned, what's the monitoring, and specifically, are they going to introduce more conditionality into some of these payments, to ensure they're sort of strictly linked to real economic need. And is it linked to kind of labour market participation, education, various different things, because otherwise that's going to be a serious block in the operational expenditure that will be difficult to work down.
And another topic that we're talking about, of course, the healthcare for the B40, and this insurance company, right, that's basically stepped in and contributed a 2 billion initial investment on the fund. Your thoughts and opinions on that? Is that enough from a healthcare perspective? I reckon it's just a good start at the moment.
Yeah, I mean, I think as we were saying, I mean, before the budget was unveiled, that that healthcare is a huge challenge, and Pakistan had set a very ambitious target of doubling the amount of expenditure. So I think it's these kind of creative options that are going to be the way to achieve its goals in terms of healthcare spending. So I think that's encouraging. I mean, obviously we need to see the detail. I mean, just as a sort of side note, I thought it was also encouraging that there was movement on rare diseases, which is a big problem in Malaysia. But I think even then it's there's still a way to go. It was sort of identifying 4 or 5 I think specific conditions, and I think we need a kind of broader policy definition of rare diseases, and then the funding to follow. So, but yeah, I mean, overall in terms of healthcare, I think it's this kind of slightly more innovative, looking for how insurance companies can play a role that is going to be essential in delivering the huge increases that the government wants to achieve.
Just a few more comments on that. I think if you look at the market, government employees are already being taken care of by the government, so they get free medical care anyway. Then when it comes to the private sector, if employees of private sector may be covered by the corporates insurance schemes, but what's left out actually are the others who are maybe self-employed or who may not be employed or who may be just family members. And so what do these people do? I think the scheme that's proposed is a Tenang scheme. I just had a quick look at it and I thought it was quite interesting. The premium that the insured person has to pay is actually a few ringgit a month, which is fantastic, you know. And so in case that anything happens to the insured person, you know, then at least there will be a payout to the dependents. So I think in that sense it's a good coverage, you know, for everybody.
Right. Much has been said about the contribution of small and medium scale enterprises, right? In this case, we're seeing a corporate tax reduction to 17%, reduction of 1%. Gentlemen, do we see enough incentives for the SME industry? I personally, in my opinion, I don't think there was, but what are your thoughts?
Well, I mean, I think it was interesting because there were a few different things there. So, as you mentioned, there's the review of the corporate income tax, and also there were, you know, a bunch of different incentives on human capital and on the fourth industrial revolution. I think, you know, just to, you know, something to flag is it's quite interesting these other corporation tax reviews that I assume it's not clear whether or not they have thresholds, i.e. whether they would apply also to SMEs. But looking at, for example, you know, reviewing the tax treatment on losses, because, you know, one example that has been given in the past is it took Twitter 12 years to turn a profit. So actually, you know, if this new policy of saying that, you know, you can only kind of pass over losses for 7 years holds, it'll be interesting to see whether SMEs are exempted from that or whether that's just for kind of larger established corporations, because it actually can take quite a while for new businesses to turn a profit. So I think, you know, I agree with you. There's some good stuff in there for SMEs. There's some stuff in there on corporate tax in general, which needs to be looked at in a bit more detail, and also how and whether it would apply to SMEs.
For me, I think the 1% reduction rate is already a very good reduction because they are the privileged group. Nobody else gets a reduction. So to me, 17% by any measure, I think is a very good rate.
That's hear from the tax man.
Yeah. 70% because
that puts perspective to things.
Yeah, because the normal corporate is 24%, and if you talk about individual, the top rate is 28%. So 17% is very good. But actually, SMEs are not just encouraged in the form of lower tax rates; they actually get a lot of soft loans as well.
Right.
So if they were to go to Bank Pembangunan, and if I'm not mistaken, is SME Bank, which is Bank Pembangunan. So they actually can get what we call it soft loans, you know, and that's how, you know, they're already being benefited.
I think the way forward is, again, streamlining of the practices as well as the SME communities as a whole. In terms of how they run their businesses, yeah. Okay, well, thank you, gentlemen. We are wrapping up this post-budget discussion. Any last thoughts that we've not managed to cover thus far, Laurence and also Poon?
For me, the big one, the elephant in the room, is really the voluntary disclosure scheme, because it's going to be a big incentive and also a big discouragement for people who have not reported income in the past. So hopefully this will, in a way, allow the government to collect a good amount of money. And some of the other countries that have implemented such a system, like in India as well as in Indonesia, have actually found something like this to be quite effective. And really, why it's effective is not just a voluntary scheme, but a voluntary scheme that has got a limited lifespan, and the later you disclose, the higher will be the penalty rate.
That's right. Yeah, it's going to be interesting how they came up with the how they budgeted for those numbers.
Yeah.
Yeah, but meanwhile, getting ready to finish off, Laurence, your final thoughts for today.
Well, I was just going to add on that point. You know, I think the thing that will be interesting is that, you know, India and Indonesia are pretty different countries in terms of the size of those markets and also the complexity in collecting tax in both of those jurisdictions. So it's quite a bold move, I think, for the Malaysian government, and as has been suggested, potentially a discouraging influence in terms of future compliance. So it will be very interesting to see how that particular policy develops.
That's right. In the meantime, a huge thanks to my two special guests today, Poon Yew Hoe, Council Member MICPA, as well as Managing Partner and Tax Partner of Crowe, Malaysia, and Laurence Todd, Director of Research from the Institute of Democracy and Economic Affairs. And coming up, news at 7. That's right here on TraXX FM. My name is Kong Yu. Thanks for joining us. Take care. Bye-bye.